Ladies and gentlemen, good day and welcome to TCPL Packaging Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on TCPL Packaging's Q4 and FY22 earnings conference call. We have with us today Mr. Saket Kanoria, Managing Director, Mr. Akshay Kanoria, Executive Director, Mr. Vidur Kanoria, Associate Director, and Mr. Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we'll have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the invite shared with you earlier. I would now like to invite Mr. Saket Kanoria to make his opening remarks.
Good afternoon, everyone, and thank you all for joining us on this conference call for the quarter and full year ended March 31, 2022. I trust all of you and your families are keeping safe and are in good health. I will initiate the call by taking you through the operational and financial performance, after which we'll open the forum to have a question and answer session. We have concluded the year on a very strong note despite a demanding macro environment. I'm very pleased to report that TCPL for the first time has crossed a milestone revenue of rupees 1,000 crores in a financial year and over rupees 300 crore in one quarter. On a standalone basis, in quarter 4 FY22, total revenue grew by 31% to rupees 322 crore as against 246 crore in the corresponding period. EBITDA has improved by 38% to rupees 48 crore, translating into a margin of 15%. For the full year, total revenues grew by 19% to rupees 1,076 crores in FY22 as against 904 crores in FY21. EBITDA has also grown by 17% to rupees 157 crore, translating into a margin of just under 15%. Given the challenging operating condition, TCPL has showcased remarkable adaptability and achieved yet another quarter of sustained performance. Although we continue to witness raw material inflation, we are able to mitigate the impact on our margins by taking adequate measures, limiting the impact on our total profitability. PAT and cash profits stood at 18.5 and 39.4 crore respectively during the quarter. In FY22, PAT and cash profits stood at 49 crore and 125 crore respectively. Here I am pleased to inform that in line with our consistent dividend policy, the board of directors have recommended a dividend of rupees 10 per share. This dividend payout is the 22nd continuous year of dividend payout by the company. It is also the highest dividend payout ever made by the company. On a consolidated basis, for the full year ended FY22, total revenue and PAT stood at rupees 1,088 crore and 47 crore respectively. The consolidated figures are not comparable year on year due to the acquisition of Creative and its integration from December 21 onwards. While Creative is currently PAT negative, we believe that we should be able to turn around the company in a few months as benefit of scale, cost optimization measures, and other synergies start contributing to the performance. Moreover, post the acquisition, we have invested in modernizing the facility and optimizing the process in addition to meeting the company's working capital requirements. Overall, the rigid box is a high segment potential and value-added segment used in several end-use industries, including the fast-growing smartphone market. So we remain very excited about this opportunity. On the operational front, we are delighted to announce the successful commissioning of our second line in the flexible packaging unit at Silvassa. The facility has effectively doubled the segment's capacity, and the plant also comprises of a new 10-color gravure printing press and other ancillary equipment. As indicated in previous calls, we expect to optimally utilize the new line over the next 12 months. Furthermore, TCPL Innofilm Private Limited, the company's wholly owned subsidiary, has commenced trial production at its new film line also at Silvassa. With the rise of sustainable packaging awareness among large brands and consumers globally, we expect demand for our product to increase in the coming years. Therefore, while we remain cautious on account of ongoing external situation, we are confident that the company will grow substantially over the next few years by leveraging its expertise and institutional strengths. Given our increased capacity, focus on growth through diversification, and growing demand for sustainable packaging solutions, we believe we should be able to continue registering healthy growth going forward. I would now request the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, in order to ask a question, you may please press star and 1. The first question is from the line of Saurabh Datta from Minerva India. Please go ahead.
Hi, thanks for the opportunity. So I'm just curious if there has been some sort of a tipping point in domestic folding carton demand, because demand has clearly accelerated recently. Paperboard manufacturers have in particular cited elevated food grade board demand. So it's a little perplexing that at a time when FMCG guys are dealing with their own margin headwinds, all of this is happening. So have you seen any major shift towards paper as far as FMCG food packaging board conversion is concerned?
FMCG food packaging, I don't see any major shift because the basic, barrier properties are not met directly by paperboard, but it's a more indirect method of packing. But certainly paperboard demand is outstripping growth otherwise in this segment because of many other replacement to plastic products. But I don't think that there is any particular shift as such. Yes, Akshay.
Hi, I'm Akshay. I'll just step in. Basically, although FMCG volume growth is a bit weak, as we've all seen from the numbers coming out in this quarter and last quarter, there is a shift towards paperboard, not just in India, but more so globally, especially for food products, where things like takeaway containers and trays and things like that are moving from plastic to paper. So there is a sort of secular shift towards paper, which has seen a sustained increase, and I think that plus lack of investment in these European and North American mills over many years has resulted in a big increase in, a big gap between demand and supply as far as paper is concerned. So the Indian paper mills and all are taking advantage of that. As far as our business is concerned, although the customer, like-to-like volume growth has been weak over the last 6 months, 1 year, our own demand has grown because we have increased share of business in existing customers and also developed new customers. So I think that answers your question.
All right. Thanks a lot. That's it from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Pavan Kumar from Ratnatraya Capital. Please go ahead.
Sir, can you give us an idea of what might have been the split between volume growth and realization growth for the year and for the quarter?
So the volume growth was just under 5%, whereas overall revenue growth is almost 18% for the year. And it's similar for the quarter. It's in fact higher in this quarter, March ended.
So volume growth would be still around 4-5% or even lesser?
Yes, 4-5%.
It's volume growth.
Volume growth for the year.
Okay.
But as
yes, sir. And when are we expecting to start our new flexible packaging line? Has it already started?
Yes, the new flexible line is already started. Yes. Sorry?
So, is there any contribution of revenues from there in this particular quarter?
Yeah, it was capitalized only end of March, so it was only a few days. So there's no really contribution from there.
Okay. And Creative, when was it integrated, sir?
From 4th December.
Is it a part of the result?
Yes, it is part of the consolidated result.
Okay. So the small dip that we are seeing between the standalone and consolidated would be majorly the loss from Creative, is it?
Yes, that's right.
Okay. And any capex plans, sir, for FY23 and FY24? Anything planned as of now?
Yes, FY23 there is a capex plan. We have to, there's some amount of balance left over from last year, and plus we are going to add capacity in our offset carton business. So we are adding a new line for which we will be investing. Total outlay would be 100 crores.
Okay. And basically, the asset turn that can be expected should be around 1.5 to 2. Am I right?
That's the minimum we can expect. It should be, in fact, higher than that.
Okay. And in terms of the raw material prices, what is the trend that we are seeing in Q1, sir? In the sense, are we facing further inflationary headwinds, or how is that working out?
So on the paper side, there's a mixed trend. In recycled materials, in fact, pricing has become soft. In fact, it is going down because the Q4 was very, very high. But in the virgin board, the more value-added board, raw material is still in short supply, and their raw material costs are growing. So there is still inflationary trend. Whereas in the flexible packaging segment, in some items it is still inflationary, like solvents, chemicals, etc. But in basic film, it is currently soft.
Okay, that's fine. And just 1 second, sir. Yeah. So margins, at least we have, should be sustainable, right? At least at 14-15%, or over the medium term. I am not asking about the next quarter or so, but in the medium term, should that be the margin expectation?
Yeah, I mean, we have achieved that, so we don't see any reason why not.
Okay. Fine, sir. I'll get back in the queue. Thanks.
Thanks.
Thank you. The next question is from the line of Vipul Shah from RW Equity. Please go ahead.
Congratulations, sir, on an excellent set of results. Just wanted to, understand previously also on earlier calls, we had this question about whether the company will be able to get back to the 42-43% gross margins, which we used to clock earlier. And definitely, at least the gross margins have been stable, but considering the current inflationary environment we are in, do you still believe there is some ground to further increase our gross margins?
So our gross margin is quite close to that figure. If you look at the year to date, we are almost at 40% roughly. 39%. So yeah, we are close because the inflation is so high, because the incremental cost, to maintain that kind of incremental margin is very challenging. But we are close to that number.
No, one more question, which I had was, are the gross margins better in the flexible business than the traditional business, or it's basically more or less the same?
No, flexible business gross margin is lower, in fact.
All right, sir. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, I just wanted to understand how frequently are our contracts with our customers negotiated, and when did this negotiation last take place?
So customer contract negotiations is ongoing. Some customers are even on a monthly cycle, some are on a quarterly cycle. Nowadays, because of such high volatility in raw material pricing, it is more frequent. Earlier, it was could be annual, could be 6 months. Depends on volume and which customer. But in the present circumstance, it is a much shorter time period.
Okay. And would it be fair to expect, say, a growth rate of, let's say, 10 to 15% on your base paper packaging business, paperboard business?
Sorry, based on a what? I didn't get you.
Yeah, on our base business, on our carton packaging business, can we expect a growth rate of 10 to 15%? Is it possible?
Yes, it's more than possible. It's very possible. In fact, we have been achieving beyond that in the last couple of years, even though COVID was there.
Okay, sir. Well, because I was just looking at our previous, there were years where it looked very difficult for the base business to grow. That's why my question was there. Of course, you have done a great job this year. Yeah. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Pratik Kedia from Kedia Securities Private Limited. Please go ahead.
Yeah, hi. Hello, sir. Thank you for taking my question. Great sets of numbers. I just wanted to understand if you can give a little your opinion on what's happening with the paper segment. We're hearing about some shutdowns in Europe, in paper mills, paper prices going up. How does this affect us, and how do you see this playing out going forward?
Yes, Akshay will answer this.
So as I said earlier, basically, I think there's been a lack of investment in places like Europe and North America over the last decade. And at the same time, there's a secular shift towards paper and paperboard all over the world because of sustainability and anti-plastic, etc. This is more so the case in the virgin paper market because that is suitable for food contact. And what's happened in post-COVID is that this shift has only sort of accelerated. So there's been a huge increase in demand all over the world for these kind of materials, which I'm talking about virgin paper and paperboard. And our Indian mills are taking advantage of that and doing a very robust export business. And as the Indian demand revives, that kicked in as well at the same time. So you see these virgin board and virgin paper suppliers really improving their whole prospect. On the recycled side, what we're seeing is basically the cost pressure, acute cost pressure on account of input costs going up in terms of the waste paper, other chemicals, transport costs, all of that. And these led to a big increase in the prices of those materials. But their market is not as robust in terms of the export and all of that as the virgin guys. So I hope that answers your question.
That does. Thank you. I really appreciate that. Just one question, not related to this one. Just wanted to know if you can give me a brief about the competitive landscape right now. Are we facing anything new? There were a lot of companies in the startup space also, which were not manufacturers, but I think direct sellers like Bizongo and some other players which were indirect like Moglix and some others. Do we see them as a competitor or like do we have any competition that you're facing from these companies in any manner or any segments?
So in general, our industry is fairly fragmented. It's a multi-thousand crore market. If you ask me what's the size of your industry particularly, no one can say. It's a very fragmented market dominated by small-scale local suppliers who have old relationships with the customer. And as those customers mature and develop and grow and they require more stable and value-added suppliers who they can rely on, they come to people like us. As far as these startups are concerned, that's not really had any much impact on our business. And in fact, to some extent, it can be a good thing because they can sort of, they're not manufacturing, they're not the manufacturer, they're an intermediary. So they can route these smaller brands and stuff to us and, sort of be an intermediary or a middleman. So to that extent, they're in fact a good thing. They're not really a competitor. I wouldn't say that.
Got it. Makes sense. Sure. Understood. Thank you so much. That answers all my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Dhruv Shah from Ambika FinCap Consultants. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations for a really good set of numbers. So basically, I have three questions. One on Creative. How much would that be? How much did Creative contribute in the current quarter?
9 crore. Hi, thanks. The Creative contributed rupees 9 crore for 4 months since acquisition.
Right. And what would be your capacity utilization right now?
Capacity utilization there is quite low, about 40%.
Okay. Great. So I have one industry question. Considering the raw material constraints the industry is facing right now, I'm sure that you would have taken the market share because FMCG companies are just reporting 1 to 2% volume growth. You guys have reported something around 4 to 5%. So do you think this market share which we have taken is sustainable? And going forward, do you see FMCG companies being more loyal to larger players like us?
I think FMCG customers are loyal to people who can deliver on time and quality is right, and anyone who services them properly at a competitive price. But having said that, yes, we are picking up market share also because we are adding new customers, and within the same company we are adding, and also our supply chain is run more efficiently, so we are getting raw material in time. All these things contribute to this.
So my question was primarily because we are a very price sensitive industry because there's no entry to barrier as such, at least as far as the paperboard is concerned. So in that context, I was asking that because now FMCG companies would have seen such a high raw material increase, going forward, do you see that they will overlook pricing for some time and be giving more business to us?
Hey, I think no one is overlooking pricing at any time. As you said, it's a competitive business, but at the end of the day, you should get the material also on time now.
Yeah, that's
right.
right.
That is a reliability and is very critical.
Right, sir. So one question on your balance. Right. So I have a question on your balance sheet. Have we seen a peak debt? Because debt right now is around 400 crores. Do you see it going up? I know that you have 100 crores capex, but our cash profit is 125 crores for the current year. So I'm assuming that this 100 crores can be funded through internal accrual. So I'm assuming, so can we expect that we have reached the peak debt and from here the debt should come down?
So the debt will be as a ratio and a percentage. I think that's the way to look at it, not in absolute terms. And if the company grows and debt as a percentage of the growth or percentage of sale, percentage of net worth, the debt to EBITDA, I think these ratios and percentages is what we should strive to improve rather than the total absolute amount.
Okay. So, and the last question, so in our corporate presentation, we had guided that it's our endeavor to reach 20% ROCE. So, with our capex plans and with creating now contributing, do we expect to reach that milestone by FY24?
Yeah, so the ROC is basically when we make an investment, our whole idea and strategy is that we should manage 20+% ROC, and if you see in the past that was the case also, and we see that coming back, and certainly if you go by the last few months, I think we are sort of
improving.
Yeah, I mean,
we were there. Return on capital employed, we have hit 20% plus about 8 years ago, 7 years ago, then it dipped to 10, 12, 13%. And then over the last 2-3 years, it is improving. I think in this year, we've gone up to almost 15%. So it is getting better. It means better utilization and more efficiency.
Right. Great. Thank you so much for answering all my questions and all the best for future quarters. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pavan Kumar from Ratnatraya Capital. Please go ahead.
My question is answered. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vipul Shah from RW Equity. Please go ahead.
Thank you again for the opportunity, sir. I have a follow-up. If I heard you correct, sir, Creative basically operated at 40% capacity utilization and contributed close to 9 crores in the year gone by. Do you see Creative operating at close to full capacity this year?
So right now, because of this international situation with China in periods of lockdown and this Russia war, the supply chain of this mobile phone business is a little affected. Means our customers are not able to get their raw material like chips and microprocessor and small parts, with the result that they are not able to ramp up full production. And second thing is that even Indian smartphone market is a lot dependent on export, and the export is also affected due to the international position. So we do expect improvement, but we don't expect a very high level of utilization.
And the long-term, volume shifting to India and the India volume growing, that is very much baked in, and we expect a big improvement. But in the immediate time, there's it's taking time because of all of these disruptions from COVID, China zero COVID policy, and then this war situation and the RM scarcity and all of that. So basically at the customer end, the production is really hit. But once it comes back, we'll be fully ready to take advantage, and we can grow this by factors of several multiples.
And also we will get into other forms of rigid box, which in any case we are trying.
For all our other customers.
Yeah.
So just a follow-up to that, and I hear you when you say that, sir, it is basically a secular shift that the mobile phone, manufacturing and export will increase. Obviously, these are not the times when we should expect growth, but the secular shift is here. So are you, as a company, are you looking at putting in more resources into creative and growing capacity to be ready for the growth whenever it comes?
Yes, absolutely. We've already started doing that since we took over. We are expanding the building. We've already added very modern equipment, and we will further develop as we go along, because it's a small unit and it has to come to a much bigger scale.
All right, sir. Thank you so much.
Yeah.
Thank you. The next question is on the line of Gunjan Kabra from Nivshay. Please go ahead.
So congratulations for a good set of numbers. My first question is, so what was the export proportion as a percentage of revenue this quarter, and what was it in the previous quarter, and which countries do we export? Like major revenue comes from which country, and from in near term, how are we seeing exports for our company?
So exports, overall export, I can tell you for the year was about 23%, and we are exporting to a lot of countries in Europe, Netherlands, Sweden, UK. Middle East is a big geography in which we export, parts of Africa. So yeah, it's fairly broad-based across these three regions. And now we are looking to expand further to the North America, where we also see a lot of opportunity.
Sir, is it possible to give quarter on quarter?
No, quarter on quarter figures are not published.
Okay. Sir, also this quarter we were able to maintain our margins, but from seeing the paper prices, high paper prices, are we seeing a pressure on margins going forward, or will we able to maintain it?
So paper price in this quarter, we witnessed the highest volatility and a very big incremental increase in particularly recycled paper, and that has been mitigated reasonably well. Now, currently the recycled is on its way down. We don't know how long that is going to last, but it's, as I mentioned earlier in the call, this pricing has become far more dynamic these days. So it's being very regularly monitored by customers. So we hope that we will be able to maintain margins.
So what is the mix between recycled and virgin paper?
The mix hasn't changed really that much. Right now, both are almost, I would say, 45, 55, virgin 55, something like that.
Okay. Yeah, that's it. Thank you so much and good luck.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
So thank you everyone for your interest and all your insightful questions. Should you need any further clarifications, or if you'd like to know more about us, do feel free to contact our investor relations teams or at CDR. We hope to have your valuable support on a continued basis as we move ahead. On behalf of the management, I again thank you for taking the time to join us on this call. We look forward to our next interaction. Thank you.
Thank you. Ladies and gentlemen, on behalf of TCPL Packaging Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.